Talkback coming up in just a couple of minutes. Asking you this morning, is a home loan price war looming?
Will low housing loan interest rates negate the recent attempts to cool a red-hot property market? Give us a call, 669-11938. Are you about to call your bank and change the terms of your housing loan?
I want to change now. I'm going to jump ship.
Give us a call. Let us know. We'll also be talking with Dennis Ng, who is the founder of HousingLoanSG.com. Talkback kicks off in a couple of minutes.
And I also envisage all these relationship managers having lots of headaches.
At the banks, yeah?
Yeah.
938 Live. 938 Live. Gets you talking.
Is a home loan price war looming? Will low housing loan interest rates negate the recent attempts to cool a red-hot property market? So easy to buy a house these days, is it? Could record low interest rates mean a home loan price war is really on the horizon? Now, that's what some industry observers have told Today in its front page report yesterday. The benchmark Singapore Interbank offered rate for 3-month Singapore-denominated loans, or SIBOR, was at 0.44% on Friday, its lowest in 23 years, according to Bloomberg. The SIBOR is commonly used by Singapore banks to peg their variable home loan rates. Analysts estimate the average variable public housing home loan rate for the first year is now between 0.9% and 1.4%. But despite an already low interest rate environment, industry watchers predict that rates for home loans, which are pegged to the interbank rate, are likely to fall. In fact, Mr. Dennis Ng, founder of mortgage consultancy portal HousingLoanSG.com, said the price war for home loans has intensified over the past 6 months, while Ms. Christine Kwok, a senior analyst at Moody's Singapore, does not foresee a large-scale price war. She said she wouldn't be surprised if lower rates are offered to selective customers for a short period of time. Among the banks, OCBC's first-year rate for the bank's variable package for HDB flats currently stands at 1.18%. UOB and DBS declined to reveal their rates when contacted by MediaCorp, but DBS said that certain rates that are pegged to shorter tenor SIBOR or swap offer rates can be particularly volatile. So it advised home buyers who are worried about the volatility of the SIBOR rates to go for a 5-year fixed-rate home loan package, which will offer greater stability in repayment. This way, homeowners could enjoy the current low interest rate for the entire duration of the minimum occupancy period for HDB flats.
Now, as for UOB, it said homeowners should calculate their own affordability level to ensure they're able to service a long-term housing loan, whatever the prevailing interest environment may be. So we're asking you this morning, is the record low interbank interest rate good news or bad news for the mortgage seeker? Will the low interest rate environment negate the measures recently put into place by the government to cool the property market? Now, if you thought it was all over for you property-wise, will the low rates tempt you to get your feet wet once again? Now, when it comes to your housing loan, will you now go to your bank to get even more favorable terms, or will you go bank shopping? And are you satisfied with your current interest rate terms? Tell us what you think on 669-11938.
Now, also joining us this morning is Dennis Ng, founder of HousingLoanSG.com, and he is no stranger to the quest of getting favorable bank loan terms. Dennis, how would you assess the impact of the current low interest rates?
Yeah, I think, the current interest rates on housing loan is very low. It's about 1+%. So probably it's like below 1.5%. So if you actually own a property, the current rental yield is about 3 to 4%. So in other words, it means that anybody who owns a property and rent it out currently, they actually have money in the pocket every month, even after deducting the full payment for your housing loan installment. So in this way, it does make the property market and property investing a little bit more attractive because of the low interest rates.
Dennis, now you are no stranger to getting, the best loan for people. Tell us what's happening on the ground as we speak.
What's happening on the ground? In the last 6 months, as SIBOR goes lower and lower. So before that, SIBOR has been hovering about 0.8% to 1%. Then thereafter, it goes to about 0.6 to 0.7%. And in the recent month, it has gone below 0.5%. This is the lowest level in 23 years. And as a result of that, in the last 6 months, we see the banks, keep trying to outbid each other. So maybe you have a bank launch a new package today, and maybe 1 week later another bank will say, oh, okay, I'll launch another rate. And so the war for the housing loans market have intensified in the last 6 months itself.
Now, it's really tempting for the investor, isn't it, these low interest rates? To what extent do you think this may fuel even more speculation in the property market?
Yeah, so like I mentioned, so easily right now, if you just buy any properties, you are going to have a positive cash flow. In other words, the rental will be more than enough to cover the housing loan installment. So it will actually sort of tilt the balance that it seems attractive. But of course, I like all the industry players, I want to caution everyone that buying a property is a very long-term commitment. So you should not be actually decide to buy a property just because of the current temporary low interest rates on housing loans. And you should actually do your own proper financial planning and think longer term.
Now let's balance the attractive interest rates against the cooling measures that have been introduced recently. What do you expect the end effect to be, the net effect to be?
The net effect, actually the main cooling measures introduced recently, the main impact is actually on the HDB resale market because of this new ruling that anyone who owns a private property, you cannot buy a HDB resale flat. So actually we have seen HDB resale flat transaction already down, and we also can see the cash over valuation already down. But the problem is HDB resale flat mainly are financed by HDB loan. So only about 20-30% is financed by the bank loan. But on the other hand, for private property is 100% financed by bank loans. So in actual fact, the recent cooling measures did not in any way make buying a private property less attractive. In actual fact, some of these people who now cannot buy a HDB resale flat, they might be forced to go and buy a private property. So I would say that on the private property side, the recent cooling measures actually did not really dampen much of the property market.
Right, and now with these low interest rates...
Why not?
Yeah, why not? But as Dennis said,
That's right.
it's a long-term thing.
Indeed.
So please think carefully before you go and buy a property.
Not 3 years, not 5 years, because of the current favorable locked-in rates.
Give us a call, 669-11938. Talkback continues in just a moment.
Talkback with Bharati Jagdish and Keith D'Souza on 938 Live.
Will low housing loan interest rates negate the recent attempts to cool a red-hot property market? Will you be tempted to go and buy property now? Give us a call, 669-11938. Mr. Tan joining us now.
Yeah, good morning.
Good morning, sir.
Yeah, I've always maintained that this setting up of the Berlin Wall, in other words, those who own property, HDB cannot, own private property cannot buy HDB. I think it's shooting yourself in the foot. This policy will shoot yourself in the foot because what you're doing is you're cutting off supply of both ends of the Berlin Wall, and that is going to trigger a demand due to the lack of supply because everybody is holding their arms and money is pouring into Asia. This is why you get liquidity. And liquidity actually in the banks, they're trying to entice people to buy the properties, right? Or to use the money, or they cannot be paying out interest. Now this is what they call economic. It's a cycle, and this policy of doing it is a bit short-sighted, if I may say. Thank you.
Thank you very much. Dennis, let's talk to you about the loan itself. Have you seen more people trying to restructure their mortgage loan packages, perhaps?
I wouldn't say restructure as well. Restructure may actually mean there's something wrong with their loan and so forth. It's a matter of refinancing. So some of them actually, what happened is they now start to shop around because they realize that from news and so forth that now interest rate is like closer to 1%. So if anybody now, if you are paying your housing loan interest rate at a rate is like 2+%, I think you are already paying too much. So it may make sense for you to shop around. And also there are some of them, because of the property value have gone up quite a bit in the last 1-2 years. So what they can even do is they actually, it's possible to even get additional loan on private property. That is if your market value has gone up. So some of them are even now taking up an additional loan so that they can have the cash maybe as a standby or as an investment opportunity fund into other investments.